We're here today to talk about, pre-qualification, and more specifically, how you actually leverage pre-qualification. We're going to have kind of a multifaceted conversation. It's going to include some background, and then we're going to try to get into some specifics that where we can actually really drill down and take advantage of having the experts that are here with us. Like I said, we kind of did the intros already. Kevin Clements, Kate Takeo, thank you so much for joining us from Experian, and then Robin from FPN. And so as we kind of set the stage here, already done the intro. So the first thing we're going to address is, what is pre-qualification, right? We hear a lot of terms. Depending on what industry you are, you may have more or less familiarity with the topic. But instead of just assuming that everybody knows what we're talking about, everybody on this call lives and breathes pre-qualification every day. So it seems second nature, but we obviously want to make sure that we have a firm grasp on what pre-qualification is. And to do that, Kate is going to take us down that path.
All right. Good morning, good afternoon, everybody. So I wanted to start with where pre-qualification sits within the customer life cycle. When you consider just beginning to end, the first time you engage with the customer, interact with them, all the way through, just working with them, bringing them on, managing any of the products they have through you, this really sits at the very front end of that. And so when we're talking about making sure that you've got the right folks coming to you and you've got the right relationship with the right folks, pre-qualification is a really important tool to do that because it gives you an opportunity to present them really at the start with offers that are relevant to what they're already looking for, and you're able to use the credit information in order to present them with the best offers. So you're off to a great start with them, from the jump. So there's no surprises once they get to moving forward because you've already got a good read on them. So if we move into the next slide, I'm going to get into the pre-qualification product a little bit more specifically. So pre-qualification is a consumer consent-based product. So what that means is these folks are already actively looking for a specific loan type. Usually this takes the shape of, they're just either looking specifically with a lender, or sometimes they'll go to an aggregator. But in any event, what they're going to do is they're going to say, hey, look, I'm going to give you my information, understanding that you are pulling my credit for the purpose of presenting me with offers. So these folks are usually going to be coming in with a very specific thing in mind that they're looking for, and it's going to give you the opportunity to see the credit file to put the right offer in front of them. So that creates the engagement. They're coming directly to you, and then with that, the permissible purpose for that pull of the credit is consumer consent. So with them coming to you directly and being actively engaged from the start, the obligation on your end then is to present them with the offers. So you do get a look at the credit file, you get establish the connection with the consumer, and then using that credit information, you're able to say, hey, look, here are some offers for which you're pre-qualified. So that gives them a level of confidence to move forward in the process, understanding, okay, I, I'm not going to like go way in on something that maybe I'm not even qualified for. The thing that's really important to know also is it's a soft pull, which means it's not going to trigger alerts and things like that. That usually can happen in the process a little bit later. That can just trigger some interest in from the competition. This is really a nice way to get started, get a snapshot, get the right offers, and establish a really good connection with that consumer by presenting them with the appropriate offers. I think we're still on the life cycle slide. Are we able to push to the next one?
Yep. And while I click over to that, I know you
Mhm.
mentioned the soft pull nature and not alerting competitors. Can you maybe elaborate a little bit on how the soft pull impacts or doesn't impact the consumer themselves?
Sure. One of the benefits to pre-qualification is it does give that consumer the level of confidence that there's something to proceed with without doing a hard credit pull. So with a hard inquiry, it has the ability to impact their credit score. Usually it's not a significant impact, but it still does cause some hesitation with consumers sometimes. What it does is it gives them the chance to say, hey, you can look at my credit because I'm really interested in seeing what I might be eligible for, but since it's a soft pull, it doesn't have any impact on the credit score. So, again, it's beneficial to them in that they can get a really good solid sense of what they might be pre-qualified for without that impact to the credit score. And then it gives, you the opportunity to get that credit information on the consumer again to present them with the best offers available so that you can establish a really good relationship with them right from the start. I'm going to go into some of the other benefits associated with it. With the pre-qualification product, you're presenting offers for which they're pre-qualified, but there's not a firm offer of credit. So in other prospecting strategies, there's a firm offer of credit needed when it comes to things like a pre-screen program. What this does is it allows you to say, hey, here are some options for you based on what we see and what you're looking for, but there's not that firm offer of credit obligation. If they accept the offer, what you would then do is move forward with an application, and that would take them through the process. And then it gives you another opportunity to gather more information, do another credit pull, and really establish the parameters of what that's going to look like moving forward. So pre-qualification isn't intended to be sort of the poll that tells you everything and you move forward with. It's a way to get the right offer in front of the right customer at the right time so that all of those subsequent steps are really already lined up and there's really no big surprises. Additionally, with pre-qualification, we talked about the no impact to the credit score, so that's the soft. Opt-out does not apply. So for firm offer of credit for pre-screen, there is an opt-out list, and if the consumers decided to put their name on that opt-out list, they won't even be involved or included in a pre-screen program. That has different rules as it relates to pre-qualification. So when you're doing pre-qualification, all of the FCRA requirements, all of the things that you need to keep in mind to make sure that you're doing this in a compliant way is built into the product. We're not giving you things that you can't have as it relates to the rules and regulations around how the consumer data is used and for what purpose. Since pre-qualification is consumer initiated, they're seeking out information. They're authorizing the credit pull to be presented with offers. So opt-out does not apply in that instance. So I'll go ahead and pause. I'm not sure if there's any questions or anything in the queue at this point.
Great, thank you. I don't see any new questions quite
Okay.
yet, but I did want to piggyback one thing real fast, which is, we do the pre-screening side as well, and I know we're here to talk about pre-qualification.
Mhm.
Two quick notes though. One, we do have additional webinars on that same registration page, some with other subject matter experts from Experian to discuss things like pre-screen. So some of those are upcoming, some of those are already completed, but either way, you can go view them and continue to learn about other services like pre-screen. Um, but the other thing is, just as having been in the space, that opt out, not applying here is increasingly more relevant. 5, 6 years ago, we would see maybe double digits, 12, 13% of the population landing within the opt out. We're seeing north of 20%, right? So a lot more folks are being made aware of the opt out. A lot more folks are choosing to opt out. So being able to control the campaign, the program, get the consumer to specifically opt into your service, your offering is super powerful, especially as that opt out percentage gets bigger over time.
Thanks for mentioning that, Ryan, because the other pre-screen is a really valuable prospecting tool too. So I think it is important, and that's why we wanted to really kick off with what is pre-qualification, because both offerings have their place depending on what you're looking to do. I think the key difference is if you're considering pre-screen and pre-qualification is, pre-screen, the permissible purpose is different. So firm offer of credit. So usually consumers aren't even aware that you're pulling credit information to present them with an offer because it's not initiated by the consumer and it's pulled under a different permissible purpose under FCRA. With pre-qualification, since it's consumer initiated, they are actively seeking the offers and they're actively shopping. So again, different use cases, a little bit of a different slant on why you want to use this one or that one. So definitely work with your FPN team to determine what's going to be the best path for what you're looking to do. Both very valuable tools, but we are focused on pre-qualification today, so please check out the other information Ryan suggested if you're interested in pre-screen.
And last question for you,
Mhm.
Kate, are there any industry limitations? Is prequal, does it operate in, mortgage? Does it operate in, credit card space?
I would say most of your, I'll call it traditional lending. So, your personal loans, your cards, your HELOCs, your mortgages, really any lending or financing opportunity. The reason I say financing opportunity is, we do see it come up in spaces for leases and things like that too that aren't true credit, but we do consider it financing. So I would say it has a pretty broad application across multiple types of financing and lending.
Great. Well, thank you so much. I appreciate that. Um, so we're going to stop the shared screen portion, and you can see our beautiful faces better on the screen here. So first, Kate, thanks so much for the background on pre-qualification and for getting us, up to speed on what pre-qualification actually is. And now, Kevin, as we switch into your portion of the discussion, you're on the hot seat here. I got some pretty difficult questions loaded up for you. What I'd like to see us do is move from the theoretical, what is prequal, into a little bit more of the what does prequal actually solve. So, what are the market, conditions or restrictions or issues that pre-qualification seeks to solve? Before I ask you the first question, though, I want to let folks know, remind them about the Q&A. Again, we'd love to tailor this conversation to those on the call. So if you have a specific concern and you're curious as to how maybe pre-qualification can work within that obstacle or work to help overcome that obstacle, please drop it in the Q&A, and we'll try to get to it towards the end of the session, if not during. All right. So without further ado, so Kevin, just to kind of open it up, Kate gave us a great background on what pre-qualification, does more generally. But when you think about how that impacts the actual process, a lender or a financier, to make it a little bit more broad, what are some of the things that some of the pain points that prequal actually helps mitigate and helps with the loan process overall?
First off, good afternoon, everybody, or good morning. For some of us, I think we're still in the morning hours. But Ryan, that's a great way to start this transition. Kate, I think, did a great job explaining what the solution is from the nuts and bolts of it. But now let's take it a little broader. And as everybody on this call, relative to mortgage, and I think also other markets as well, as Kate indicated, the single biggest issue in mortgage is pull-through rates. How are we getting that consumer from getting them interested to getting them to the closing table, right? In my role at Experian, I monitor that very closely, and that number is not a huge number right now. So the throwaway expense associated with that is top of mind for everybody in the industry, and it's something we're working very hard in conjunction with the end user community, as well as the platform and technology solution providers, and hence our relationship with FPN, to try to address that exact point. Prequal, as Kate described, is a great approach once you've got somebody to your literal or virtual door, right? There are other ways, but what that really tees up is that they're looking for a credit product. But prequel is not a pull it, push the button and forget it, right? It's there needs to be rigor around managing data and information and data exhaust. And a lot of those solutions Robin's going to get into and talk about in a little bit that FPN can help bring to this audience. But managing that data in and of itself so that you can go back to your advertising campaign and your approaches to getting interest in the consumer marketplace. There has to be a purposeful management is the phrase I like to use there, Ryan. A purposeful management of the data, so that you're getting the right people to the door for the products that you have on your shelf, to offer them. Because if you're attracting the wrong people that aren't interested in what you have on your shelf, then we're back to that pull through rate and the decline and the throwaway expense. So it does go a bit hand in hand, between the two, and then leveraging prequal and the power of what it brings for that, in the case of a broker, that they can have consent from the consumer to look at information about them and then look at their inventory of products and say, you know, Mr. Clements, I think this is a product that I hear you saying you're interested in. Does that interest you? Then you're off to the races.
Yeah, that absolutely makes sense. And that brings up maybe a question. And Kate, feel free to chime in, or Kevin, I'm sure you got this as well. Is the report that they receive any different than what they would get later in the stage, as far as maybe the data that's on the credit report?
No, the data is the same. The data is the same. The biggest difference is the permissible purpose. Obviously, it's underwritten instruction, which is controlled by the FCRA. And now in the marketplace, pre-qual a decade ago, not even that long, maybe 5 years ago, was the only soft posted approach. And that's an operational handling issue by all the NCRAs. That, just so the audience knows, that is not an FCRA. You can read every top to bottom in the FCRA and you won't find the term soft posted or hard posted.
Right.
It's an operational handling by the NCRAs. But what that handling does is then it's who can also see that and what it can be used for. The FCRA does call out a requirement that if the consumer chooses to look at their credit report, we are obligated, we the NCRA are obligated to make sure that anyone that got access to that information, it's recorded on their file and the consumer can see it. When a soft posted inquiry is applied to a consumer's file, a commercial utilization, so another lender, a downstream furniture company, after they buy the house, they can't see those soft posted inquiries. So it's not commercially visible, but it is consumer visible. So just a little background on FCRA there, not to put everybody to sleep on that topic. But
No, that's a great breaking it down, and that goes back to what Kate was mentioning earlier around the pre-screen, and sometimes we hear the term triggers, and that this kind of flies under that radar and doesn't trip any of those alarm bells, notifying your competitors that you've looked at the consumer's credit. So
exactly.
With and I know we talked within the confines of mortgage, just to reiterate, pre-qual can be across various industries, but mortgage is something that we do a lot of. Kevin, I know that's near and dear to what you do every day. So we'll kind of keep on that talk track a little bit. So when you mentioned the lower pull-through rates, and the advantage of having this, basically the entire credit report early with the soft inquiry, you still have fall off. So is pre-qualification a less expensive tool?
I will qualify this by saying we do not sell into a lot of the people that would be in your audience directly. We do to some in some segments of the market, but not all. Some we go through a reseller. FPN would be such an entity and a relationship we have. So the actual price point in the market is not controlled by us. That was a lot of words to get to that statement, but my lawyers tell me I have to say all those words to get there.
Gotcha.
But in general capacity, a pre-qual is less costly than a traditional credit report, a 3-bureau merged credit report. So that's why a number of years ago, the marketplace started moving there as this pull-through rate was going down, throwaway expense was becoming an issue. Therefore, they were looking for a less expensive approach to do that. And pre-qual can fit a cost mitigation opportunity as well. So that's another attractive point to it on top of all the other things that Kate pointed out. From an operational perspective, Ryan.
Understood. No, one other item that we hear a lot of, and Kevin, when we were discussing this, in advance, you had a slightly different take than I've heard before, and this is with regards to asking for the information from the consumer. So Kate, keep me honest here. For the pre-qualification, the required is really just the name and address, and then the date of birth and social are optional submissions. Is that correct, Kate?
That's correct. Yes.
Okay, so with that, Kevin, right, if I think in terms of a marketer, right, I like less friction. So asking for less information seems like less friction. Prequal allows me or affords me the opportunity to do
Mhm.
that. But when we discussed it, you had a slightly different take. Would you like to elaborate on that?
I can give you my perspective on that. And while Kate is absolutely right, and that's why she designed and built the product the way she built it, was to allow for less friction. So we accommodate that. However, I'll go back to my early comments. Prequal functions when you've got the consumer at your literal or virtual door. It Prequal does not get them to your door. What gets them to your door is your advertising strategy, your marketing strategy. And your advertising and marketing strategy needs to be driven by consumer information that you can gather. So while it may create less friction in the moment, the more data you get helps you load into tools, working with FPN and the solutions and the support that you bring to your customers. You can leverage all of that data. And I would argue that you get a better overall marketing campaign that's much more targeted, that whenever that broker, again, just as the example, looks at the inventory of credit products that they have on their shelf, making sure that they're driving the right people to their door is going to be paramount to impacting and mitigating long-term cost. That comes from more data so that you can hone zip codes, you can hone different characteristics about consumers. All of that information is so impactful. So yeah, I know we talked about this beforehand, Ryan, and you looked at me like, wait a minute, hold on, and I gave you my answer. It You don't have to. You can get it, but I would suggest to the audience to give thought to what your bigger strategy or advertising strategy is and how the data could help that.
And one other thing, which I know we talked about offline, so I'll just bring it here for everybody's benefit, is there is a higher hit rate when you have a complete set of information. It's impressive actually how many what percent you can find folks with just the name and address. But when you do add those additional PII fields, you begin to approach 100%. It's never going to be 100%. There's over 300 million people. There's a lot of data out there. There's thin files. There's lots of different things. But there is the additional benefit that that you're going to have a higher percentage of hits with the increased information that you gather.
Yep.
One little thing that I do want to just throw out we're obviously providing a lot of information today. Part of the role of companies is, as Kevin mentioned earlier. You've got Experian, which is clearly the repository. You've got the end user. Sometimes those relationships are direct. Sometimes those relationships are indirect. A big part of the indirect relationship is to take all of this information and distill it down into bite-sized pieces and help craft strategies and things like that, because it can become a little bit overwhelming. So I do just want to kind of mentioned that if it sounds like a lot, it is. But thankfully, we've got good resources available to you, and can help anybody that's not exactly sure what to do next, through the process. So Kevin, I wanted to bring back to something you mentioned, because it's crucial to businesses to understand where their dollars are going, especially on the marketing side. Sometimes those are very difficult dollars to track and to see, the real impact and the fall off. You mentioned everything from the data exhaust to the pull through rates and everything else. So in keeping with that concept and trying to understand like what my actual, return is, we obviously know what happens to those folks that come through. But we don't always know what happens to the folks that didn't reply or didn't get qualified. And so there are some really unique products. We're not here to talk about those, but I've got around lost lead, different things that we can put together to help the clients understand how to tabulate that return, stay focused on it. And I think you hit the nail on the head where it has to be a cycle, right? You do a campaign, maybe you have an A/B testing, A performs better than B. If you keep sending A/B notices, that's not really helpful, right? You need to learn from that, change your strategy, pivot and move forward. Um,
Absolutely. Yeah.
anything else that maybe you've observed that clients have done well or that they could do better on as far as keeping an eye on that their return and how to improve that and how tools like Prequal help facilitate that?
Yeah, Ryan, great point. That is the single biggest thing I hear when I'm in an audience and people are asking about this. And I would tell you, the more important data isn't the data that closed; it's the data that didn't.
Yeah.
And I see you got a big smile. It's the data that didn't, because that's someone that you spent money on getting them to your front door, only not to have, in a lot of cases, as though the figurative shelf here, there's no product on the shelf for me to offer them. So I have now utilized resources, and we're talking about cost mitigation as being the biggest issue in the marketplace right now. If I don't learn from that, a bit of shame on me, right? Because that's the powerful data. Okay, now I know that that ad campaign that consumer was interested by, that drew the traffic in that zip code, well, maybe I need to shift over a neighborhood or so. Maybe, broaden my scope for my products that I'm offering. So I would say that the biggest thing is the ones that didn't. And quite frankly, I've seen the tools that FPN has. I've seen the staff that you have. I've heard them and their understanding of the market. And you guys can really help this audience with those kinds of things to take better advantage of the prequal when you do get them to your doorstep, because as Kate said, then prequal just sings because you can see what's coming. You can identify any areas you got to probe on a little bit more, but you get transitioned into an extension of credit and an application and the processing and all the other things, but you get them to the closing table. That information is very important too, but it's reaffirming what you're doing, what you supposed and you knew. What didn't go anywhere is what's going to help you find the gold tomorrow.
Absolutely. And I know I sound like a broken record at this point, but check out the webinar series. We've got some other topics that have been kind of somewhat brought up here with regards to just different ways to use data creatively. So some of those are coming soon items that I would absolutely encourage you join and check out what we can do for our clients in those environments. Excuse me. So we've covered a lot of ground here, right? We've gotten through the basics of Prequal. Kevin, we've got a little bit more specific about how Prequal actually, impacts the industry. We've learned a lot about maybe when to use it. It definitely is an earlier stage, right, product. It's more aligned with the sales and marketing strategy, getting a lot of information in with the relatively limited inputs, as limited as name and address, but we do like to gather the additional information as we discussed here. And by the way, we've had a few questions come through, but Kevin, you were basically, it's like they were teed up for you. You were hitting them as they were coming in. So no need to pause. Yeah, no need to pause for those. We've actually covered them. I am going to try to type answer replies in here, but I don't want to detract from the conversation. So those might come at the end, or we might have to follow up with an email afterwards. So let's see. So now I'm going to pivot the conversation away from the theoretical even more and go into a little bit more of the practical side of it. And so I'm going to put the presentation back up, and we're going to pass it over to Robin to help us understand So now we know what this tool is capable of, right? We know the portion of the market that it satisfies. So how does it actually work?
Right. Thanks, Ryan. And thank you also to Kevin and Kate. Great information. I actually learned a lot myself, so appreciate that. So we're going to start with the basics of processing a pre-qualification lead. As discussed by the previous presenters, there's several ways to intake leads. Common examples include, in-person connections, referrals and web leads. For mortgage brokers, maybe you're aligned with a realtor that provides consumers looking for a mortgage. Possibly roofing companies can be a lead source for construction loans. You may, you may simply market your products through your website, social media, and email campaigns. Some more in-depth sources include pay per click and invitation to apply. We don't have time to really dig into all of these in depth, but we do have some future webinars, again, that Ryan has plugged a few times that will go into these more in depth. So we'd love to hear that. But we also are always willing to have one-on-one sessions if you're trying to adjust, kind of how you want to have your lead intake. We would be happy to have a one-on-one session. Just please reach out to us after the webinar. So, once you have your lead, you're going to request a pre-qualification report. And you really only need, as I think Kate said, minimal information, first name, last name, address, to complete a soft pull. Your hit rate will be higher by including a social security number and date of birth, but obviously that is not required. Any good pre-qual product should give you the ability to run in-person leads as well as online, which would be initiated by the consumer. And we're going to go into that a little bit more in a minute. In addition, if your system is not simple and automated, that can certainly impact your process. You want this to be a very early, quick, and easy way to get these leads into your workflow. So once you've run the report, you're then going to review and see if the applicant pre-qualified for any of your product offerings. This can be a simple manual review based on the criteria that you have defined. But if you're using a more advanced pre-qual solution, you can have the report reviewed electronically and automatically determine if there is an offer match. If the applicant is pre-qualified, you will present those offers and then proceed with whatever your loan approval process would be. If the applicant does not match an offer available, you have several options. A common option is to determine why they did not qualify. Maybe they aren't aware of the impact of revolving debt on their credit file, or they could need to pay down, could need to pay down some of that to qualify in the near future. Regardless if they qualify or not, and this kind of goes back to what Kevin was saying, you've secured this relationship and you now have an interested party that you can nurture and lead into becoming a future customer. So to summarize, there's benefits to the pre-qualification process. This is the lightweight, low friction tool. You have the ability to quickly and simply review a lead's full credit report at a minimal cost without any risk to the consumer. So again, I think sometimes there is some confusion, but you do receive a full credit report file. It all depends on, what makes the pre-qualification different, which is what Kate went into, is how you use that after the fact, right? So, you're only using that in order to produce a product offering to those applicants. It also benefits them, as we said, because there's no inquiry on their credit report, which will avoid any credit triggers. And another plus is that you get their consent through this process, either verbally or through electronic disclosures. And that's helpful to go ahead and start the process early with their consent. Ryan, are you, I don't know if you were talking.
Hey, Robin, that is
myself. Yeah. Actually, I did want to just interject because it's something that, again, we discussed previously, and again, not trying to make this all about mortgage because it can go across industry, but Kevin, we were talking the other day about how, unfortunately, oftentimes in the mortgage process, even for some well-heeled, sizable clients, they're not great at capturing consent because they're leveraging downline items like the disclosures to capture those consents, or maybe the full 1003, which they haven't even gotten to yet. So, maybe you could expand a little bit on the benefit of capturing this information early in the process.
Ryan, we both jumped off of mute at the same time on Robin's prompting. Yeah, you have to get, as Kate indicated, as under the FCRA obligations, you've got to get written instruction, written consent, and the trick here under pre-qual and the FCRA, you have to get it from every applicant, every consumer that you're pulling credit for. You've got to get it from them individually. That is unfortunately one of the kind of downsides to pre-qual, is you've got to get everybody to authorize their own access of information, unlike extension of credit, where a spouse or a significant other can authorize access on the other party's behalf. But in this case, they all have to, and you have to get it at the time. You can't wait and say, oh, I'll get that later, to your point on the 1003. Nope, you got to get that up front, because if you never get to, unfortunately, the 1003, now you find yourself in an FCRA violation situation that nobody wants to be there.
Yep. And also, just to elaborate on one additional topic, easy, right? Something that we want to try to do with marketing. Less friction is something we want to do, but never at the cost of, not being compliant, right? And as Kevin mentioned, a few times, the in-person or the virtual, right? The door, whether physical or virtual, so much is moving into the online space. And, it is important that you are capturing these things, and, not to just single out FPN's pre-qual tool, but to use it as an example, as Robin mentioned, when the consumer goes to that page, and to Kevin's point, it is the individual consumer, not the co-applicant, but each individual consumer. They have a very clean, simple, easy path, but they're also consenting to both the written instructions and electronic disclosures, as well as, depending on which tool you use, likely some type of TCPA acknowledgement, which gives you the authority to call them, to email them, etc. So these are incredibly important, and an online solution like FPN's web-based software makes it easy, but again, not at the risk of missing something from a compliance standpoint. So this simple tool that you can send out to your consumers is actually very powerful in capturing those consents early in the process. So Robin, to kick it back over to you, so we've got the layout of the process. Did you want to take us through a specific example?
Yes, if you can go to the next slide, I have a very basic example here, and this is really what what you could expect a consumer to see through the process that we just discussed. So what I have here is a very basic marketing email. And within that email is an option to get pre-qualified instantaneously. But this is just one example. You could send a link in a text, you could post on social media, or have it available on your website. In other words, like your pre-qualification, you can use this link in any way to get a user pre-qualified. We have people who embed this in many areas of their marketing campaigns. So once a link is clicked, there's a very simple form that the applicant can complete to see if they have any matched offers. Obviously, again, I'm giving you examples based off our system. Other systems, may have a different process, but this is how it works for us. And this is a very, like I said, this is a simple, basic form. You can do something more customized. You can collect income. You could require social and date of birth or not. And always make sure that you're working with someone that will allow you to customize this process to benefit your business and for what you need to know. But the example here is just very basic. Once the applicant, and this is also where we're receiving that digital consent. You don't see it here on the page, but before they submit, they do have to provide their consent here. And once they submit that request, then the softball credit is run, obviously, in the background in our system. And then, you can run a decision criteria that actually returns applicable offers. If you wanted to have a more general response that says, thank you for submitting, we will reach out to you. You could say that. If you wanted to show that they were pre-qualified for multiple offers, that's an option. So really the sky is the limit here based off your business needs. But this is just one quick example of what their experience would be.
Yeah, and so if I'm hearing that correctly, when you when somebody sets up a pre-qualification style account with FPN, they get their own custom forms with the URL that takes them to a page dedicated to them. Is that correct?
That's correct. Yes, this page it would be their own custom link that takes them to an application that it's pretty form based, so it's not completely customizable. Like that consent has to be in there and things of that nature. But yes, we can allow some customizations for your business.
And again, that's where the flexibility has to still remain compliant. So we allow certain changes, but other changes we don't allow, because again, the goal is for us to help put the guardrails out there so that everybody can operate in an efficient but also compliant manner. All right, so Robin, what does it look like? This is kind of like the consumer experience, right? They get a very simple email. Maybe they go click the link. They put some minimal information in. They get served up with a couple of offers, maybe followed up with by the loan officer. But what does the loan officer see?
Yes, if you want to, yep, there you go. Go to the next slide. Here at FPN, like we talked about, we offer a robust but very flexible pre-qual application. I know the view here is small and it's not interactive. Weren't going to have time today for a system demo or anything, but again, happy to give you a full demonstration at your request. The main purpose of today's call was really general industry overview of the process, but we also want you to be aware of what we feel is a very robust tool and know what those capabilities are. So we have a web-based version that can be white labeled, as well as pretty much an out-of-the-box API integration, which is pretty simple to integrate with. However, depending on what application you're using, there could be roadmaps and timelines that might impact immediate integration. We provide, like I showed you before, part of this application will give you that individual application link. And you can create, again, as many links as you would like. So if you had, brokers within your company that wanted their own link attached to their email signature, or maybe they had their own, like web page, you would have that ability to have as many links as you would like within your company. And so, using the data on the report when the report is run, FPN has over 100 predefined calculations. And this is something where I think we really stand out in the industry. And to be honest, we add more calculations pretty much daily or weekly whenever we have a need for something. We have very quick turnaround time on adding a new calculation. But for instance, if you were interested in the applicant's, say, DTI, maybe a number of credit inquiries that they've had, you wanted a sum of their revolving debt. All of these are calculations that are available to you that you can use in that decisioning criteria for the offers. So it really allows you to create very specific offers, based off the data in that report. It speeds up the pre-qualification process and eliminates the errors on manual reviews. So obviously some credit reports can be pretty extensive and have a lot of trade lines, a lot of information. And this really, if you build out your criteria correctly, it can just give you the answer right away. Like, here's the best product for this applicant. And so that's what's really great about it. A good example to kind of cover in this scenario is always credit cards. We're all very familiar with them. We all use them. You say you may offer a platinum, a gold, a silver, and a basic card. And, you can build the criteria that would pre-qualify an applicant within our system. You would probably use the credit score, you would use, any delinquencies, other things like that, whatever their current revolving balances are. And then you can actually kick back the result to them that's saying, oh, you were approved for our gold or our platinum. So, This is a really great tool, and I think the exciting part is the amount of data that we are able to extract from the report and perform these calculations is very impressive. So really, a few final thoughts. We do offer all three bureaus. However, as you can tell with our partners on the line, we do have a really great relationship with Experian and do typically encourage their product if you're going with a one bureau solution. We think that's the best, that's been the best fit for most of the folks that we do business with. We do also offer all FICO and Vantage scores. And this gives us a lot of flexibility in customizing a process that works for most industries and most business models. So obviously depends on your needs and what type of applicant and consumer you're looking for, but we really have all of those tools available within the FPN Pre-qual system. So I don't know, Ryan, did I miss anything? Is there anything that you think I should have covered on our tool that I didn't get to?
No, I think, yeah, I think that's fantastic. I'm going to actually take a page, there's a quick detour because I got a good suggestion at the beginning. Skip a slide and then I'll come back. Just to maybe summarize, and then we'll hit some questions before we officially wrap. When we think about the consumer, loan life cycle, regardless of what industry we're talking about, obviously a credit card or personal loan is going to have a bit of a shorter cycle. Mortgage is going to have a bit of a longer cycle, but there's a pretty consistent pattern that we see throughout, right? We've got to find the opportunities. We got to drive those opportunities in. We got to move them through the process. We want to know what happens before, during, and after closing. So there's a lot of different things. And as we've discussed, obviously this discussion was about the top box there, rectangle, about pre-qual solutions. But FPN as a reseller in this space, we do take that broad lifecycle approach. We take a very consultative approach with our clients and show how not just pre-qual can benefit your business, but how pre-qual tailored with an invitation to apply, with maybe some pre-screening and then some other intelligent tools, maybe lost lead analysis, so we know what happened to the ones you didn't close. So we can really go across the entire life cycle. But since we're here to talk about pre-qual, in my opinion, at the end of the day, pre-qual has got two basic functions, right? It's to increase the size of the funnel, and it's to move people more quickly through it. And we get to increase the size of the funnel through simple online interactions, where a simple link to a form can be added to an email campaign, as Robin mentioned, can be added to a website. If you've got a tech team and you actually have your own software, it can be integrated. There's APIs that are available. But at the end of the day, if somebody's shopping at 2 o'clock in the morning in their pajamas, you might not be at work, but your website is still available, right? So if we can get these tools out there, right, you spend a lot of time, energy, and money driving people, whether it's through pay-per-click, social media, your website. Once you get them in the door, what are you going to do with them? And if we can get that consent early, which leads to a full credit report that gives you tons of information with relatively low friction, then you're, again, not only increasing the size of the funnel, but you're moving them through very quickly. And the earlier you can find out, maybe they're, like you said, Robin, a platinum credit card or a gold credit card, maybe they're actually falling short of all opportunities and they need a little time to figure it out. All of these things become available when you have the data. And this allows you to not only get the data, but get it quickly, efficiently, while still, maintaining compliance. So that's kind of it from the presentation portion. We've been hitting so many of these questions throughout that's why I did not leave as much time. I've been asking them along the way. But with that being said, if there are any last minute questions, now is the time to ask. So as we wait to see if those trickle in, first, I do want to just thank Kate and Kevin again for joining us. This was an incredibly valuable discussion, in my opinion. I hope that our attendees, feel the same. If there's follow-up after this, if you want to see a demo of what FPN's capabilities are, if you want to just explore this further, please feel free to reach out. We have contact us information on the page. Obviously, you received an email or 2 or 10 from us to attend this webinar, so you can reply to any of those. And we'll set up some time to to have those discussions in more of a one-on-one environment. Final plug for additional webinars. Do go to our webinar page. We have some upcoming topics that might be of interest. We dive a little bit deeper into how to use data. We address pre-screening in a different one. And we have actually one that's very apropos to right now, especially if you're in the mortgage space. We'll be talking to Vantage Score. I believe it's early December. We've got them on the calendar. There's been a lot of changes, a lot of price increases with FICO. Vantage Score in the mortgage space Vantage Score 4 is approved for mortgage, but it's still not fully utilized. So we're going to have a great conversation about, what we see as the future of Vantage coming up. I don't see any questions, additional questions coming through. Anything, Kate, Kevin, that you feel like you wanted to maybe clarify or just get out there yourselves?
No, I'm good. Thanks, Ryan.
We hit
thanks
it all
for having us.
Well, fantastic. A recording will be made available after the fact. If you register, you'll get an email with the recording. If not, it'll be posted again on that webinar page, and some future communications will be utilizing the recording on a go forward. And once again, Kate, Kevin, thank you so much for joining us today. Thank you for all the information that you provided. Very valuable conversation, and we greatly appreciate you guys taking the time to join us today.
Of course, thank you.
Thank you.
Great, thank you.
Bye now.